Hi everyone, how are you? Hope you're well. This is the Love and Money Show. So, I am a licensed realtor, also a doctorate in pharmacy. And so, I'm going to explain to you why you should not wait to buy a house in 2023. So, you know that we are in a season where everything is overpriced, the mortgage rates are high, inflation is going on. However, the people that are telling you not to buy right now, they already have property. So I'm speaking to people who do not own a house right now. If you currently do not own a house, then you do not have to wait because you don't own property. So what you can do is go to NACA, and what they will do is give you a lower mortgage rate than everyone else. So for example, when the mortgage rates were 4% for everyone else, NACA is giving out 2%. So that's what they specialize in. They give lower mortgage rates. So you're paying a lower monthly mortgage than all of your neighbors. You can be in a really nice neighborhood paying a lower monthly mortgage than all of your neighbors. So they give you a lower mortgage rate, no closing costs, and no down payment. That is NACA. It's spelled NACA. This is for first time home buyers. So there's no reason to be waiting around if you don't own property. You can head over to NACA and take a look and see what they're offering. So the current mortgage rate for everyone else as of today is 6.44%. 6.44%. That is what the current mortgage interest rate is 6.44%. So NACA will give you something lower than what everyone else is paying. So in the past, it has been as low as 3 and 2%. So people who have bought their homes like years ago, like 7 years ago, were paying 2%. So some people are waiting around for the housing crash that's supposed to happen. They're waiting around for the housing crash, and they're waiting around for the mortgage interest rates to go back to normal. Because as you know, they're not normal right now. They're higher than there should be. 6.44%. It was 4%. It did have a history of 3%. It was at 2%. Now it's at 6.44%. However, mortgage interest rates have been higher than that in the past. They've been as high as 10 and 18%. So it could jump even higher than where it's at right now. So this is whatever the feds decide to do when they have their next meeting. They could increase the mortgage interest rates higher, or they get to take it lower. So what happens is when you buy property and the mortgage interest rates are higher than normal, so if you're getting it at 6.44, if you're waiting around for it to drop to 5%, that's what a lot of people are doing. That's going to save you like $150 a month. So that is what some people are doing, waiting around for the mortgage interest rates to drop a little from 6.44. They're waiting for it to drop to that 5%. So what you could do, especially if you don't own a home, head on over to NACA and see what interest rate they can give you because they are lower than everyone else. Also, you could offer the seller a lower offer, give them a lower offer for the home, which will decrease your monthly mortgage, or buy a cheaper home that will give you a lower mortgage. But whatever you decide, just make sure that you do all the calculations and make sure that it is affordable for you. So, buying a home right now is not affordable for a lot of people. That is why they choose not to do it. But like I said before, they already own homes. So it's a difference if you already own several rental properties versus this being you're a first time home buyer. So just take that into consideration. The NACA program, what they offer. The other things that you could do is give lowball offers or buy cheaper homes, especially if you're looking into getting into investment properties. You can look for cheaper homes, which will give you a lower monthly mortgage. But you're going to make sure that whatever you do, that is going to be affordable. Now, instances where you could wait instead of buying right now is if your credit is not at 700 right now. If you go to NACA, they don't care what your credit score is. You could have a credit of 500 and they're still going to help you get into the house because their mission is to help you get your home if you are a first time home buyer. They do not care what your credit is. However, if you are not going through NACA, say you already own a home and you're interested in buying more property, then an instance where you can wait is if your credit score is not up to par. If your credit score is not a 700, you can spend these next couple of months paying off your credit card debt, which is going to automatically increase your score. So focusing on paying off that credit card, paying off your credit cards in these next couple of months to raise your credit score to 700. Because what's going to happen is if your credit score is on the lower end, they're going to be charging you more money. They're going to be charging you higher mortgage interest rates, even higher than what the market value is. They're going to be charging you higher um, mortgage rate interest rates. They're going to be charging you higher for your down payment. Say, for example, you could put a 20% down payment down. Say you are, because normally it's 3.5% for a FHA loan, but say you are getting a conventional type loan for 20% down payment. Well, if your credit is not on par, they're going to charge you more. They're going to say 20% down payment is not enough. We're going to charge you 25% down payment. So by just focusing on paying off your credit card and getting your credit score up to 700 or higher, you're going to save yourself money that way. A more reasonable mortgage interest rate, more reasonable down payments, and then less money on the fees that they're going to charge you. So that would be important if your credit is not up to par and you already own rental properties. In that case, it would be wise to get your credit up first and then proceed on buying rental properties so that you can buy them at a cheaper price as opposed to them charging you more for the simple fact that your credit may be on the lower end. So you make money on the buy. On the buy is when you make money. That house will appreciate. So that will make up for any money that you're paying because the house will appreciate. You want to make sure that you don't overpay. Like I said before, you can give low offers right now, or you can look for cheaper homes if you're looking for investment properties. Also, you want to make sure that you account for the repairs that need to be done. Make sure that you have enough money saved, at least 3 to 6 months in reserves in case something were to go wrong with repairs. Say, for example, a furnace goes out or something like that, that you would have the money for unexpected things like that that may happen on occasion. And then enough money for the down payment. Um, it's normally 3.5% for FHA loan. For conventional, it could be anywhere from 20 to 25% down payment. You want to stay away from adjustable rate mortgages. because that is going to increase according to whatever the mortgage interest rate is. So when they increase that mortgage interest rate, you're going to see an increase in your monthly payment. And so you want to avoid being shocked like that. And you avoid shock by getting fixed payments. Stay away from adjustable rate mortgage payments at all costs. And then you're only going to get property that you're interested in keeping for at least 7 years. And then you're going to make sure that you screen your tenants thoroughly. There are some tenants who, what they do is they'll pay a security deposit to move into the house. And after that, they aren't going to pay anything, a dime, because they know the laws in your area. Some states have better laws than other states. And the states that don't have good laws, they will take anywhere from 6 months to evict a tenant that is not paying rent. So the tenants know that. So they'll move into your property, pay a security deposit, and they know the law. It's going to take 6 months to get them out. So make sure that you screen your tenants so that you don't end up with a tenant like that. Make sure that you're getting a responsible tenant that is going to pay the rent, that plans to pay the rent. All right. So this is a Love and Money show. If you like the show, please hit the like button. It helps the channel. Please hit the subscribe button and the notification bell so that you won't miss an episode. Also, leave a comment below. Let me know your thoughts. Also, I have a real estate course. It is a free course. If you're interested, you can email me and I will send you the link. So I will have that information in the bottom. All right. This channel is all about building wealth. Also, it is about love, family. All right. So thank you for watching. Have a good rest of your nights.